A warm welcome to today's webinar on UTI Innovation Fund. UTI Innovation Fund is an open-ended equity scheme following the innovation theme, which aims to bring next generation edge to investors' portfolio. Myself, I represent Niranjan and I represent products team at UTI. And in this webinar, we are joined by our Chief Investment Officer, Mr. Vetri Subramaniam, and along with him, our Group President and Head of Sales, Mr. Peshotan Dastur. UTI Mutual Fund has been one of the pioneers of mutual fund industry and has weathered multiple seasons and have been helping over 10 million investors in achieving their financial goals. With this backdrop, I first invite Pesi Dastur to share his thoughts on some of the key strengths of UTI AMC. Over to you, Pesi.
Thank you very much, Niranjan, and a very good evening to everyone on the call here. Really appreciate you taking time out to listen to the story of UTI in general, and in particular, the product in discussion today, UTI Innovation Fund. Niranjan, at this stage, I'll invite you to share the presentation deck for us to be able to talk to people. And before we come down to speaking about the fund, the portfolio, and what this fund management team will try and aspire to do, I will take a few moments to actually introduce or highlight or refresh people's understanding about UTI. And everyone knows that UTI is actually the first mutual fund in the business, the pioneer of this industry. But few people realize that actually UTI does business beyond the mutual fund business alone. Totally, we manage 16,13,000 crores of assets. We've got a nationwide presence across 697 districts in the country, but very few people are aware that UTI has customers coming to us from 35 different countries with our own offices in Singapore, London, Dubai, most recently in Paris. And yes, we have got a license in principle approval from the US for us to set up business of distribution from there too. Of course, all of this over the last 60 years has been built on a strong value system, governance practices, and meeting with regulatory requirements. I'd like to, actually, if you may, Niranjan, this represents UTI across the country and our presence on the ground in each state. And while we have 166 branches of our own, we will tomorrow, the 29th of September, add to this count another 29 branches across the country, taking us closer to the 200 mark. We have 63,000 plus partners that work with us, taking the message of financial planning and investments, and have over 1,000 people in the sales team that work with this sales force of distribution. We're also supported by our district associates in various locations where we don't have a presence on the ground, and that's what put together makes us available in over 697 districts across the country. Niranjan? Well, UTI was actually formed in 1963 as Unit Trust of India and not created as a company or a trust, but it was the outcome of an act of parliament. That was the first avatar in which we represented ourselves as Unit Trust of India. 40 years later, in 2003, UTI Mutual Fund was created. At that time, our four sponsors were State Bank of India, PNB, Bank of Baroda, and LIC. And over a period of time, since 17 years later, we actually got our third avatar, if I may call it that, Niranjan. UTI AMC became a listed entity in September/October of 2020. And thereafter, if you go and read our red herring prospectus, it clearly calls out to say we are a standalone company with 4 different 100% owned subsidiaries doing different businesses in the core area of investment management, be it retirement funds, be it venture funds or alternative funds, be it our mutual fund practice or our international distribution business. That's what UTI Group is about, Niranjan. And this represents our healthy mix of shareholders that we have today. I'd like to point out one particular area on this slide, which is T. Rowe Price International Limited, a very large, well-renowned global investment management firm, is today the largest shareholder in the listed entity of UTI AMC, holding about 23%. Punjab National Bank still holds about 15%, but the other 3 sponsors over a period of time have diluted their holdings, today hold below 10% each. So today we are a listed entity with a single largest shareholder being an American investment firm and a board of directors, Niranjan, which are completely independent from the shareholding in their majority. As on June 23, the total assets that UTI manages is about 16,13,000 crores. The largest comes from our PMS business, in which we manage mandates for many corporates and financial institutions, about 2,57,000 and 2,48,000 respectively from our public-facing businesses of mutual funds and NPS. And the smaller elements in the pie chart that you see are constituted from our AIF and our international businesses. That puts the number perspective for the mutual fund business in particular. So while on 31st August, the total assets that we managed were close to about 2,63,000 crores, 97,000 crores comes in that from passive equity funds. And to that end, it makes us one of the largest and leading players in the space of passive funds. A healthy mix between equity, fixed income, cash, and hybrid products, whether you look at it from a 31st August reporting or the quarterly average reporting for June 2023. Yes, Niranjan. That's what I thought would be a meaningful update to share with the audience here about UTI, about its 3 different avatars that we've existed in for the past 60 years to become one of the founding institutions in India for many other market infrastructure institutions that we know them as of today. So with that, I'm going to hand back to you, Niranjan, to take this conversation ahead. Thank you.
Thanks a lot, Pesi, for that useful data points on UTI AMC. And now I invite our CIO Vetri for sharing his insights on innovation theme, potential opportunities, and the investment strategy that we follow under UTI Innovation Fund. Over to you, Vetri.
Yeah, sure. Thank you, Niranjan, and thank you, Pesi, for setting that up in terms of a description of the journey of UTI. And if I can add, I think through UTI's journey, through its many avatars, In many ways, we have been a pioneer in terms of offering schemes to people. The first open-ended equity fund was offered by UTI, of course. And if you even look at our history, both as a mutual fund as in our earlier avatar, many innovative products targeted at things like children, retirement, the original unit link plan, all of these have actually been pioneering innovations by UTI. But today, I'm going to talk about a fund which is named Innovation. But this is not about innovation from our end. This is about creating a portfolio of companies which have innovation at their core. And what we think this fund will do is invest in businesses that use innovations as a method of creating novel solutions to meaningful problems. These could be problems faced by individuals. Remember, today we are able to conduct this conversation over Zoom, which was unheard of 10 years ago, when if we had to do NFO, we would physically be traveling to multiple locations to meet the large number of investors that we've managed to get hooked onto this single call. So the wonders of technology have made this possible, and it has been done by creating value by applying a novel solution to a very meaningful problem. So innovation is this general theory of using technology to achieve certain needs of the customers, needs that the individuals may not even be aware that they have. It could also be the use of technology and innovative solutions to address certain longer term challenges that we face as an economy in transition, as we deal with the multiple challenges related to climate change and the need to make new explorations in the areas of chemical technology as well as mineral technology, as we look to move ahead from the era of fossil fuels. So innovation is a very wide expanse of terms. We've just put down some of the things that are over here which come to our mind: biotech, space, cloud computing, fintech, digital payment, data analytics. But the simple principle I want to leave you with is that innovation is the process of creating value for both the consumer and for the owners of businesses, which is where we get involved as owners of businesses, to create value eventually for us as shareholders. So if we move on to the next slide. Now, some of you might say, India today, it's been a great year for the country, hosting, the G20. We just opened the new parliament building. We talk about Amritkal, the journey of the next 25 years. And we think in terms of what does it mean when today's $3.5 trillion economy becomes a $5 trillion economy, or what happens when it becomes a $10 trillion economy. Now, the simple point that I want to make, and what you can see on this slide on the left-hand side, is a simple representation of certain data points for the US economy as it went from being a $6.5 trillion economy in 1992 to a $25 trillion economy in 2022. And then on the right side, we have India's data: 2002, $500 billion economy; 2022, which is 20 years later, almost a $3.5 trillion economy. Now, we have all been conditioned to think in linear terms. मतलब कि income बढ़ेगा, people will want to buy more cars, उनको नया job मिलेगा, then they may want to use that job and the security of their income to take a loan from a bank. They may want to buy a new house from it. तो ये जो thinking है, ये बिल्कुल linear style का thinking है कि जब income यहाँ से यहाँ बढ़ेगा, तो what will people do with it? But the point that I really want to bring home to you today is that the biggest driver of growth and wealth creation in the economy is not just the linear equation, which will certainly happen to some extent, but it is also the factors which are non-linear. It is what we call the non-linear, perhaps even the exponential factors that create growth and wealth. And that is innovation. So if you look at the bottom row on the US side, we have just in 1992, 2002, and 2022 put over there the values of the NASDAQ 100 index. when GDP of US went up from 6.5 trillion to 11 trillion, that is over a period of 10 years, it went up by about 70-80%. The NASDAQ went up by more than 200%. Right? And from 1992 to 2022, when the GDP went up 4 times, right? Car sales went up slightly, bank credit went up very significantly. New home sales actually in the US, because of their real estate boom and collapse, are actually only slightly higher. Look at the value of the NASDAQ. It goes up almost 30 times, right? So what this tells you is that there is a linear opportunity in the marketplace, but there is also a non-linear opportunity in the marketplace. और वो जो non-linear opportunity है, वो opportunity आती है उस companies में जो innovation और technology use करते हैं customer की एक या individual और businesses के problems को resolve करने में by bringing about higher productivity. So if you, for example, think about the NASDAQ 100 index, which went up 30 times during the time when GDP went up only 4 times. मतलब कि it's an exponential function. What are the biggest companies in the NASDAQ? It is Apple, it is Microsoft, it is Amazon, it is Nvidia, it is Meta Platforms. इसके बाहर देखेंगे तो outside of that you will get Alphabet, which is the parent company of Google. You will get Tesla, which is at number 8. Literally all 9 or 10 companies. I think Costco is maybe number 10. So all of these companies are companies which have used innovative methods and technologies to create value, not out of a linear function, but a non-linear function. And that is what we mean, that we think India has now reached a place in its growth trajectory where we could be at an inflection point whereby in the next stage of our journey, there will be an opportunity to participate in increased car sales, increased home sales, increased credit. But very interestingly, there could be an opportunity to participate in businesses which will have non-linear outcomes because they will use technology, innovation, and disrupt the old businesses and create new business models. So that we think is the big opportunity. There is no NASDAQ in India. Maybe 20 years from now, there will be a NASDAQ. But you can see the journey which has happened of the NASDAQ in the US over the last 30 years. And we think a fund like the UTI Innovation Fund, I'll describe where we will be investing in this strategy. We think we are going to be early to this opportunity of participating in the wealth creation of innovation-driven businesses, which will have a significant impact. So if we move to the next slide, this is a very old concept. Some of you may have heard of an Austrian economist who was very famous in the first half of the 20th century, Joseph Schumpeter. He's an Austrian economist, and he sort of formulated this theory that beyond that, economic growth is actually a function of the creative destruction. Now that sounds very strange to say, that how can destruction be part of growth? But that was his theory of economic growth, that at every point of time you have a set of entrepreneurs who work with a new idea, a new technology, and it is those entrepreneurs with those new ideas and innovation which actually create the business cycle and the growth of economies. So most of us have been conditioned to think about economic growth in terms of fiscal policy kya hoga, monetary policy kya hoga, per capita income kya hoga. But Joseph Schumpeter's view of economic growth is that it is driven by waves of creative destruction. At the heart of the waves of creative destruction is the magic formula of entrepreneurs with vision, using technology, using innovation, using capital, and they are able to create new growth engines for the economy. So if we move on to the next slide, why do we think India is very interestingly poised at this point of time? देखिए यहाँ पे आप देखेंगे कि जो ऊपर का चार्ट है, this is talking about India's global innovation index rank, and very simply you can see that our position over here has continuously been improving over time. From rank number 66 in 2016, it has now improved to rank number 40. Similarly, if you look at the global innovation index score, our position has improved again quite significantly over there. So this is of course a scoring index, and among emerging economies, we are now placed next only to China in terms of the impact that we are having. This is a metric which comes from WIPO. So India as a hub of innovation is becoming better and better. Now, this is a ranking on this slide which comes from Harvard. Harvard looks as, is a country able to use its productive knowledge, its capability, its manpower, the knowledge that its manpower has, through create goods and services which will be of use to the rest of the world. Now, I talked about this earlier, in one of my webinars. Some of you may have heard it, but imagine today India's net exports of services, or even if you look at the gross number, the gross exports of services is more than our requirement of oil. So, when I started in the market in 1990, people will say, "Arey, what will we do? What will we do? We don't have enough oil." We still don't have enough oil. But today, we are able to use our people, top-notch entrepreneurs, fantastic business models. We are able to export IT services to the rest of the world, the value of which is more than the value of oil that we require. So this is the beauty of being able to use your complexity index, your country's productive knowledge, to be able to create products and services that the rest of the world needs from you. We can move to the next slide. Right. So I think one of the most dramatic changes, and this is a change which has happened only in the last 6 or 7 years, is that today there is a fantastic ecosystem of risk capital which is available for good entrepreneurs with an idea to be able to use risk capital to try and get that idea, that technology, that innovation to the marketplace and create a new business. When I was in school and college almost 40 years ago, people used to say कि अगर आपको business शुरू करना है तो आपका नाम होना चाहिए Tata, Birla, Mittal, etc., etc. But today, many of our new entrepreneurs come from middle class families. They went to an IIT, they went to an IIM. How did they build the business? Because there is this ecosystem of private equity and venture capital which is willing to fund them, and that's how they have been able to bring these businesses forward. The third most active ecosystem for startups is now in India. Number one is obviously United States by a wide margin. Number two is China, and third is India. And in fact, because of the issues related to technology sharing with China, most global people are now saying if we have to invest in the startup ecosystem, we would rather give global money into India than into China. So I think these numbers may look very different over the next few years, but simple point being, this is now becoming the sort of nursery of new entrepreneurs and new business models because risk capital has now become available. So you can see that again on the next slide. So this is a breakup of the funding, and on the right side chart you can see the scale at which funding has become available to Indian companies, and as you can see over there, the funding values are now in the best year, which was 2021, it had reached almost the level of $100 billion. This year to date, going much slower, less than $20 billion, but still we'll end up with maybe about $40-45 billion of funding, and that is still a very good number given the fact how a difficult global environment we are in, with rates having moved up so significantly. So India is got entrepreneurs in large measure, and it has got availability of capital. And on the left hand side you can see the various sectors which were able to raise money in 2022. We can just move to the next slide, Ranjan. Next few slides I'll just run through क्योंकि I think most of this आपको अच्छा मालूम ही है, शायद हम सब लोग mobile payments का काफी इस्तेमाल करते हैं आजकल because of UPI and the rest of it, and which is why we dominate some of this. ये important इसलिए है क्योंकि अगर ये आपके पास ऐसा technology नहीं होता, then not all your citizens would be able to go online and to be able to transact online in a digital way. So this whole Jan Bandhan, Aadhaar, Jam Trinity as we call it, has enabled us to build the platform on which multiple consumers are able to use technology at a very low cost to participate in the digital economy. That creates a very attractive market for entrepreneurs to bring their business models to market. How big is the market? Almost 50% of the country is online, 700 million people on the internet. 350 million people have done an online transaction, और उसमें से 190 people have actually done an online shopping transaction. So this is the remarkable thing with data in India becoming so cheap. More and more people have been able to come online, and more they are becoming the target customers for businesses who are saying, can we use technology and use the internet to be able to create these business models at very low distribution cost to access the potential base. Move on to the next slide. So where are the potential investment opportunities for this strategy? Dekhiye, it is fairly broad. E-commerce, fintech, food tech, clean tech, specialty chemicals, healthcare, digital advertising, software, deep tech. Or what I would actually say is, dekhiye, we are limited by our imagination in terms of where these opportunities are. Because if you had asked me what is food tech 10 years ago, I did not even know that it can be an area which is a completely new area which can develop because of the interplay of technology. So what I would say is that this is still an evolving area. यहाँ पे जो हमने sectors दिखाए हैं, these are the sectors that we know of today. But I will expect that in the next 5 to 10 years, there will be many more new sectors that will come to the market because companies will get funded. For example, यहाँ पे तो we have not even mentioned artificial intelligence, but we do know that artificial intelligence companies in India are now getting funded. मतलब कि 3 और 5 साल बाद वो भी market में आएंगे for listing, और that will also become an opportunity for us. तो ये आज के जाने माने sectors हैं where we think we will be able to invest, but we think this will keep expanding in the future. So I won't run through this. This just gives you the various sizes. So these are all various industry estimates कि what is the size of the market today और 2030 तक कितना बड़ा हो सकता है each of these individual sectors, online food, shared mobility, e-commerce, two-wheeler, electric personal vehicles, online education. And देखिए सब में एक ही चीज दिखाऊंगा कि जो आप बीच में देख रहे हैं कि growth rates हैं, all of these are very, very potential high growth sectors, upwards of 15 to 20% per annum. And that's why we are saying over here, the total market influenced by the new economy could grow to almost 1.3 trillion by 2030 at a compounded growth rate of 32%. So ये एक opportunity है. We will have to see who are the companies who are able to participate in this, and that is where we will be turning our focus on to benefit from this large opportunity. So we can move on to the next slide. So again, this just talks about some of those categories. I won't spend too much time. E-commerce penetration still very low in India, significant opportunity to ramp it up, and in multiple categories: health, mobiles, apparel, grocery, home care. All of these have significant ability and potential for growth. If you move to the next slide, this is fintech. Fintech, of course, again, very interesting area. This is where large investments have happened in India. And in fintech, I would say the business models we are developing are leading the world, because using the whole, Jam Trinity, we have been able to create the platform which will help us, leapfrog in terms of business development. And the rest of the world is actually following us. We have listed over here some of the opportunities. इसमें से कुछ सारे companies have already come for listing, और मेरे ख्याल से अगले 5-10 साल में और भी कंपनी आएंगे लिस्टिंग के लिए, because many of them have already started to grow these opportunity sizes. Next slide. This is food tech. This is about companies like Zomato and Swiggy. But देखिए यहाँ पे what we should keep in mind is that as the economy changes, there is more participation in the workforce, particularly by women. India currently has only 20% of women in the workforce. This number should go up quite dramatically over the next 20 years. automatically the consumption of outside food tends to increase, because both partners in the house are involved in working, and this is something that we think will drive the food tech market over a long period. It may not be limited only to food delivery, which is the market we know now, but we think in general food tech is a large opportunity that will continue to grow. If you move to the next slide, this is about SaaS and deep technology. SaaS is nothing but software as a service. Literally something that we are using like Zoom is software as a service. Again, many Indian companies are already involved over here. Deep tech is the area where artificial intelligence and Internet of Things is being used. यहाँ पे भी काफी Indian companies have already made a start, and some of these are yet to come to market. In SaaS, some of the companies have already come for listing. But we think in the AI space, there will be new companies, and those will be opportunities for us going ahead. Next slide. This is about generative AI. As I said, this is a very, very new area. But as you can see, multiple companies are getting funded in this area in India, in AI. And therefore, we think, by the time you get to 2025, 26, some of these companies will come for listing, and we want to be prepared to participate in those opportunities. Next slide, this talks about digital advertising. देखिए, इंडिया में अभी भी the advertising money is being spent primarily through TV and press, but we already know the biggest companies in India have started to shift their spending towards digital advertising, and we think over there are new business models and new companies which are making significant headway, and this is an interesting area where we will look to invest. Some opportunities already exist, and some new companies may also come for listing. Finally, healthcare. This is an area where, of course, it is typically associated with physicality, going to a hospital, going to a diagnostic center. But, TV-based medicine, remote medicine delivery has been a concept for many years. It has not taken off. But with the current cost of bandwidth and technology, we think we are much closer to this point of time. And many innovative companies over here, some have already come for listing. They are trying to disrupt the wellness pharmacy and then diagnostic space, but we think eventually it can even enter the consultation space. Again, few companies are listed, but many more are expected. Next slide. This is global chemicals. We have just put this as an example here. As global supply chains are moving towards finding new destinations for manufacturing, India has benefited from this. We know in chemicals how manufacturing shifted from China to India, and that created a significant opportunity here. We think in the next 10 years, some other sectors will also show this pattern. For example, electronic manufacturing. Now, there is not much innovation over here, except key Indian companies have typically shown that they can execute at a very low cost of intermediation because of a labor advantage. So this is not core innovation, but we do think there will be some innovative business models here where companies may be able to combine design skills along with ability to manufacture at scale. Chemicals was all about manufacturing at scale, not so much R&D, but we think there will be new areas over here where manufacturing will shift to India, and we will try to benefit if we think innovation is a key component of the growth driver of the sector. Not just because somebody moves manufacturing of shoes to India, we will not participate in that. Only if we think that innovation plays a role, then we may consider investing in that business model. Environment, I already mentioned this because of the concerns about carbon emissions and the need for the world to phase out fossil fuels as we deal with climate change and the rise in global temperature. We do expect massive investments. We already know India's largest companies have announced significant investments in renewable, in hydrogen technologies. But there are also many young companies which are involved in this journey. Our attention would be on trying to pick those pure play opportunities rather than investing in conglomerates. Next slide. Yeah, so this is just an example of the growth in Meituan and Zomato. I think we can just move through these. These are just data slides, so yeah, people can take a look at it. So maybe I'll just pause over here, and I think. Do you want me to take the slide? Yeah, okay, I'll just take the slide. This is the investment strategy slide. So what will we invest in this strategy? We want to invest in companies that use innovation to enhance productivity, because they create higher productivity, customer को benefit मिलता है, और क्योंकि customer को benefit करता है, तो therefore they use more of it, therefore companies are able to create wealth out of that business model for us as shareholders. Also, in many cases, there is a societal and government pressure to move towards clean technologies. The fossil fuels need to be phased out. We want to move towards technologies that have positive social and environmental impact. So that again is an area of innovation and technology that we would look to invest in. Early adopters of technology, innovative processes that could disrupt incumbents, that is another area where we would look to invest. Growth, these are companies that have significant opportunities for growth. If you remember the previous slide where we talked about the size of the current market and how big these market opportunities could become by 2030, what is very clear is that the market opportunity for growth in these is multifold. It is not linear, it is non-linear, it is exponential. So our thought process in this strategy is to try to participate in those kind of non-linear opportunities for growth, but at the same time we would like to see companies that have some demonstrated track record of developing the market or gaining market share. So we don't want to invest in companies which are too early, which is why we are not doing VC investments or private equity investments. We want to look at the company after it has finished being demonstrated some track record through its PVC journey, which could be 5 to 10 years, and then they are coming to the market for listing. So we already have some track record that we can look at. Finally, what is the definition of quality when we look at this strategy? It's slightly different from what we normally mean by quality, because the typical definition of quality that we have relates to return on capital, free cash flow. Yahan pe we cannot use those definitions because these are very young growth companies. They may require capital to grow. So what we are more concerned with is the balance sheet reasonably strong, financial strength, not so much P&L. Balance sheet has to be strong. Second, unit economics need to be positive. मतलब कि आप 3 रुपए के लिए कुछ बना रहे हैं और 4 रुपए के लिए बेच रहे हैं, मतलब you are making some unit economic profit. Now, because you are running a business where there is significant fixed overhead, शायद आपको 1, 2, 3 साल लगेंगे scale पहुंचने के लिए जहां पे आपका profitability will actually kick in. But unit economics must be positive. It should not be based on only giving discounts to the customer. So when we say quality, for us, strength of balance sheet, unit economics, ability to sustain growth, these are the 3 most parameters when it comes to quality. क्योंकि यहाँ पे free cash flow or return on capital are still very early days to be able to analyze that. Finally, we would like to see some benefit of entry barriers. The early company is able to get a scale advantage and network effect such that it is able to get a benefit in terms of being able to significantly carve out higher market share, and people who enter the market later find it more difficult to be able to make any headway. So this is really the investment strategy for the fund: innovation, growth, quality. And finally, I want to also leave this point on the table. We are not looking to invest in some existing, let's say just a large bank because that large bank is now doing a new nice technology product. We want to go to those entities which are actually only focused on innovation. So this is not about saying, in banks, we will buy the bank which has the best technology. Cement may we will buy the company which has the best, technology in terms of least amount of pollution on environment. That is not our thought process. We want to buy those companies that are actually doing that innovation, which are actually driving that thing, not existing companies. These existing companies may get disrupted by these new companies, or there could be a value migration between these two businesses. That is the migration that we want to participate in, and we think that is what will create shareholder value for us. So I think I'll stop over here and hand it back to Niranjan, who will be talking about why to invest in the UTI Innovation Fund.
Yeah, thanks a lot, Vetri, for that detailed rundown on innovation theme, and also sharing insights on what are the catalysts of growth and wealth creation Thank you. So before we actually move on to Q&A, so I request and invite Pesi again to tell us why should one look at investing in UTI Innovation Fund and uncover some of its USPs.
Sure. Thanks, Niranjan. And I hope you can hear me back into this conversation.
Yes, perfectly.
I think, so while Vetri spoke elaborately on the merits of the idea of innovation and how this product will look at capturing that from the marketplace, I'd like to take a moment to reflect on why invest with UTI itself and the Innovation Fund is just another product that we can bring value to you and your table. I think the first point that I'd like to bring to the table is the team and the people that go behind the fund management that we do. Collectively, the team has over 217 years of work experience. It is one of the largest buy-side teams. And when you add up, the research capabilities and execution with our trading capabilities, it is one of the finest teams that you can, have from an experience point of view. So the first reason to invest with UTI that I'd like to impress upon is people. The second one, and Niranjan, if you can move ahead, is process. For everything that we do, I think, in life we've learned process is very important, and more so when you're looking at the function of fund management. We call the process in the equity side of fund management Score Alpha. And this is a process of, where we look at every of the 370 companies on which we do research. This covers 93% of the Nifty 500 market capitalization. So don't get fooled by the number, because the number represents a very large part of the value. But I think the process is all about evaluating each company for the cash flow that that company creates and the return on capital that a shareholder enjoys as far as these companies go. We have a system in which we rank order them or rate them for cash flow as C1, C2, C3. Any company that has given positive cash flow for all 5 previous years will get a C1 rating. For anyone that has shown positive cash flow in 3 or more years in the previous 5 years will be a C2 rating, and then C3 below that. And likewise, any company that has given return on capital employed greater than 18% on an average for the previous 5 years gets an R1 rating, and likewise as shown on the screen for a return on capital between 10 to 18 and less than 10%. And this only becomes a part of the investment making decision of the fund manager, and it feeds differently to different fund managers depending upon the positioning of the fund. Therefore, a value fund manager will behave very differently because of the construct that he has to build in the portfolio using the same data points of operating cash flow and return on capital employed. The thing that I'll make or impress upon in terms of positioning is remaining true to label despite cycles in the marketplace. And therefore, it's not only about UTI Innovation Fund, but all products of UTI. There is an underlying thought process which goes into research. There is a overlaying fund positioning that we hold on and make sure it is true to label at all points of time. And in this particular product, along with risk management and looking for growth potential from businesses that truly innovate, just don't create one additional technology, but innovate, which will change the way people lead their lives in general, is what the fund manager will look forward for, not relying on what the benchmark of the fund is actually doing, and therefore it will remain benchmark agnostic. Yeah, Niranjan. Therefore, if I may, conclude by saying this product is, a good one for investors, firstly, who'd like to participate in the changing story of India and the innovation that is happening over here. People that want to get relatively high growth, but also are ready to bear the volatility that comes with underlying, innovation as a theme. Valuations can fluctuate wildly, and therefore one needs to be able to fathom that. You can invest through lump sum, you can invest through SIPs, you can make a staggered entry also through STPs as an investor. But the only thing I'd probably put out over there, it needs the right orientation to fathom volatility and orientation towards long-term investing. The scheme will look at the Nifty 500 as its underlying index for sure. Yes, Niranjan. I'll stop over there and hand back to you to take on the Q&A session.
Sure. Thanks a lot, Prasi. While the questions are coming up, I request participants to continue to post your questions over the next 10-15 minutes. We will take as many questions on the strategy. So here's the first question to Vetri. Vetri, what would be the portfolio characteristics of this fund, UTI Innovation Fund, in terms of market cap allocation and number of portfolio companies?
Sure, that's a good question. There are literally no large companies, hardly anybody who would fit into our definition currently in our universe in the large cap space. So it will be primarily driven more by mid-sized and small cap companies. This is of course based on the SEBI definition of what is AMFI definition of what is mid cap, large cap, small cap. So we don't expect it to have any significant large cap exposure at this point of time. That could change in the future as we see some, perhaps very large listings come through. So it will be mid cap and small cap bias to begin with. The other thing I would say is this is a strategy. We are benchmarked against the BSE 500. There is no relevant benchmark index for this, which is already in existence today. It's a very nascent sector. But the idea is that it will be as diversified as possible across some of the areas that I described earlier. But compared to the benchmark, it's going to be a very high active share index, right? I mean, active share will be well above 85+% easily. And the simple reason for that is that eventually the names which qualify for this strategy, currently we would estimate just about 35 to 40 names which fit into the strategy. And then the portfolio will be a subset of that. But we do think the number of opportunities for us to invest in will go up very dramatically over the next 2 to 3 years, because large number of listings are expected, both in giant size businesses as well as some small size businesses. And we will use that opportunity by being prepared ahead of time. So, if you just to reiterate the statistics, therefore, it will be mid cap, large cap bias to begin with. The universe is not more than 40 companies at this point of time. It will be a bit of a tight, concentrated portfolio. But as more listings come through, it will expand. Compared to the BSE 500, it will be a high active share portfolio. And I certainly expect it to be a lot more volatile portfolio if you think about it in terms of beta, simply because of the kind of portfolio construct it would have.
Sure, Vetri, thanks a lot. Another pertinent question which is coming in the similar line is, given that the portfolio is concentrated in nature and also because of fast changing trends in technology and innovation, how does this fund aims to manage risk in the portfolio?
The way I will answer this is that the attempt to manage risk in this portfolio will be done the way we do in any other portfolio, which is to say that know the business you are investing in. But in this strategy, actually, we will be carrying, and we wish to carry, a high level of risk of benefiting from the businesses that we choose to back, because the history of everything that we see in investing in these kind of businesses is that you need to sort of have a frontal approach towards taking on risk and participating in that. The risk that we will watch out for, Niranjan, is the risk of the underlying business model. When I talked about quality, I mentioned two factors over there. Are the unit economics positive? And secondly, what is the kind of total addressable market size that the business has? So to my mind, anything which impacts unit economics, anything which addresses the size of the total market adversely, are what we would consider as the risks which are non-maintainable for us. So really for us in this strategy, it's more about maintaining risk at a company level rather than thinking about risk in terms of the more esoteric thing, in terms of the betas and all of that. We will just have to live with higher beta, we'll have to live with higher active share, we'll have to live with the fact that it's more concentrated portfolio, but therefore take more conscious decisions and monitoring of the parameters related to the business that I described earlier.
Sure. Thanks, Vetri. Yeah, Pesi, you mentioned about some of the USPs of the fund. So, however, there's a follow-up question. So, what would be the portfolio overlapping of this fund vis-a-vis our other strategies within UTI? And also, how do you want to distinguish this fund vis-a-vis the other funds out in the market?
So, I think, from a portfolio point of view, this product will be extremely different because it is, for most existing products, innovation is not a theme. You might invest in one or two stocks which can, fathom this kind of risk or this theme of innovation. Here is an idea that you will build full-fledged only on this. So that's the first point I'll make. The second point, I think, which is relevant is that here we are not being driven by saying, oh, I have to have X percentage in large cap or mid cap or small cap. Here, the simple idea is, oh, I have to be invested in companies that focus on innovation. A point which is probably not spoken enough of in the call today is that this is not a theme or an idea that we are going to, for the first time, look at building out. It is something that we have worked on, a theme that we have built on in time, and a portfolio on innovation that we have been running for the other jurisdictions, particularly our international business that I spoke about, where we have run this similar theme and product, and we will build on that expertise and experience in terms of running this portfolio also. So what we are saying is that, listen, we have a theme of innovation that we are running currently for different jurisdictions. We will build on that expertise in terms of taking this ahead to this particular fund, and it will give all investors a chance to benefit from it. That's the idea of this fund. It's not only about this theme or something that we are coming up to do for the first time.
Sure, but
Pesi, if I can just add to what you said, just to clarify that we are running the fund in other jurisdictions, but the businesses that we are investing are these India-based businesses in the innovation theme. We are not referring to either a strategy we run which invests in global companies like the Amazons and Googles or whatever those are. It is only India-based businesses similar to what we are now planning to do in this scheme.
Yeah, thanks, Vetri. In fact, that was one of the questions coming up. So would the fund would be investing in overseas or not? Yeah, so that you have already answered. So the next question is, are there any specific trends or technologies that you are particularly excited about at this point in time?
Sure. So just to again clarify that point, Niranjan, we don't mind investing in a India company if it chooses to list outside. The act of listing in a different geography will not, remove that company from our investment universe. But we don't intend to invest in companies that are completely global in nature. It has to have an India footprint, so to speak. And then your question was specifically about emerging areas.
Yeah, yeah.
So, I think there are two areas where I think there is going to be significant sort of listing activity going ahead, Niranjan. One is, I think, in the entire area of e-commerce. I think, at least three of India's largest e-commerce companies, the entire domain of e-commerce are still unlisted. And we expect that these companies will most probably come with independent listings in the next year to two. So these will be very large potential opportunities for us to participate in, because e-commerce, which is part of the entire retail pool, is obviously a very big chunk of consumer spending where we would like to participate rather than only be in subsections. So that is, I think, clearly one area in terms of the size of the opportunity that it would bring. But I think the opportunity that I would be more excited about in terms of what we see happening on the ground, and we are seeing this trend in the listings, are companies that are looking to use technology to create products and solutions either for the Indian or global market, right? So I'm not talking about IT services. IT services in the traditional style of the companies that everybody is aware of, Infosys and the Wipros and TCS, that is not of interest to us because those are B2B service models. But we are seeing IT companies that are using SaaS, that are using digital to create a global product business as well as a domestic product business. This, I think, is an area where we will increasingly see a lot of opportunities because this combines the classic strength of India, which is competent and well-trained manpower at a reasonable cost, with a market opportunity which exists for doing such things. Just to give you a simple example, today you take a company like Mercedes-Benz, right? They have 25,000 engineers globally working on R&D. 8,000 of those engineers actually work in India. Right. And these work on everything from EV to shared mobility to software for those companies. This is creating an ecosystem of professionals in India where you will be able to create these product-based businesses to service the global market. So that is the area of IT products and R&D solutions, which we think will be a very, very interesting area going ahead. The second area where we think there will be great opportunities for us in the days ahead are in the area of clean technology and addressing various pollution related issues, because remember, we are all very conversant with the fact India has committed to net zero by 2070, and there's a lot of investment that large companies are making in this transition, but there are a lot of smaller companies which are playing the key role in that transition, and therefore this entire clean tech, climate change related business models is where again we see a large opportunity for us.
Sure, Vetri. Thanks. So there is a question in terms of will there be a sector or sector concentration or capping at sector level and also market cap? So just to reiterate, the fund is agnostic to both the market cap and sector. So the fund is totally open to explore opportunities across the sectors and as well as market cap. And like Vetri alluded earlier, so this is going to be a concentrated portfolio. So portfolio is again expected to be in the range of 20-25 stocks. And as we are going to see, the more startups getting listed over time, so maybe the universe is also expected to expand over years, and certainly we will be keen to explore such good opportunities as well, and that can lead to the portfolio size to slightly increase as well over time. Yeah, another question, Vetri, to you. So maybe the last two questions for the evening in the interest of time. So what will be the exit strategy of the portfolio companies, and also what will be the expected portfolio churn in the fund?
Right. I don't have a view on the portfolio churn as of today, and the reality is that in most strategies, even in if you see UTI's current strategies, in general we tend to have lower portfolio turnovers. So I would expect that we will never be driven by trying to make short-term investments, but I don't want to give a number in terms of portfolio churn, because clearly this is going into a domain where we will do what is required, which is appropriate to create good returns for our shareholders, for our unit holders, without unnecessarily churning the portfolio to trade momentum. That is not the thought process here, but I don't want to give a target in terms of churn. Your first question was in terms of the
exit strategy.
I think that's a wonderful question. To us, I think the two things, and I'll go back to what I said in quality. To us, the two things that would really drive our exit strategy is the business model of the company such that it is causing the balance sheet of the company to deteriorate beyond a point, particularly if it is deteriorating because of poor unit economics, right? And therefore there is a buildup of debt. So to my mind, that's the critical risk that we would want to insure against. See, most businesses, when they are young, they don't grow into large businesses because their financial risk kills them at some point of time. So to us, what is most important is this. Yes, you may be a hugely profit making company in terms of profit after tax, but unit economics need to be positive and don't burn balance sheet capital so that you have the staying power to get to that point where your business can become profitable. The second thing which becomes quite important, Niranjan, if you remember, there was that earlier slide where we showed that waves of innovation. We will have to be careful over there because there is a risk that what is a leader in one wave of innovation then actually becomes the company that gets disrupted when the next wave of innovation comes along. I mean, just classic example, 25, 30 years ago, the leading technology company of the age was IBM. Today, we don't talk about IBM, right? There are so many other companies that we talk about. So this is an area where the waves change frequently. So that is something that we will need to be cognizant of. And I would expect that this is a strategy in which, as we see growth rates slow down, even if profitability is good, we would actually treat that as a signal of a mature industry and therefore start to look for where can we go for the higher growth opportunities. So in this strategy, a increase in profitability beyond a point, if it is accompanied by slower growth, to us is a warning flag that this industry may be getting disrupted. ROC is intact, but growth is flagging, and you need to look for how to position yourself for the next wave.
Sure. Thanks a lot, Patrick. So one last question to you, Pesi. So as this is a concentrated fund and also the exposure currently towards the mid and small cap is expected to be higher side, right? So what kind of investor profiles are the financial goals you think one would be able to benefit most from investing in this innovation fund? And also, how should investors be really positioning this fund in their overall portfolio? So if you can share some light there.
So I think, in this, if one has to look at portfolio construction strategies, one of the things investors do apply is core and satellite, okay? Which is to say, I have to participate in the broader markets, and therefore I will have a large cap, mid cap, small cap fund as my core allocations, and then the quantum depends upon the risk-taking ability of that investor. Clearly, this product will not fit, and I'll be upfront in saying it, in the core part of portfolios. But in a satellite strategy, to participate meaningfully in the changing story of India, should a product like this be well considered by an investor? I'd say the answer is an emphatic yes. Okay. You need to look at it with different lenses, though, because it may have no correlation with a rally in small cap, as we have witnessed in recent times. It may not come because you are investing in different sectors and you are sector agnostic. You may not see a rally which may play out in this theme, if I may call it out. And we've seen, at times in the market when healthcare or when IT or where, banking financial services plays out as a theme, because these are coming from different sectors, investors should be cognizant that I will not necessarily see this play as a theme. But should I participate in India's story of innovation that is happening in different sectors? This product well fits in that satellite strategy, which allows you to focus some part of your portfolio on innovation. That's the way I'd like to position it in front of people. How much should go there is a question that an individual will be able to answer. But I don't think I have a prescribed thumb rule to give everybody. But I think the merits warrant some part of your portfolio to be allocated to a strategy like this.
Sure. Thanks a lot, Pesi, for that. Great insights. In fact, thanks to both of you for your time today. So, Vetri and Pesi, indeed, a lot of insights. I hope this has certainly added value to our viewers here. Just a request to the participants here today. So, before we conclude, please use the feedback link available on the screen to share your feedback in general on the webinar. And we hope that we created some information, provided you the information and also value to you. With that, once again, thanks everyone for joining us here today. And also Pesi and Vetri for with us for use very beautiful presentation. So we wish all the investors the very best and to also benefit from the NFO, which is open today and closing on October 9th. So you may kindly make use of this opportunity available. Thanks everyone today, and this concludes the webinar.
Thank you very much. Have a good evening and a great weekend ahead.
Thank you, everybody. Have a great evening.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.